This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia wants to collaborate, not compete, with China, the kingdom's energy minister declared on Sunday, saying he ignored Western suspicions over their growing ties. As the world's top oil exporter, Saudi Arabia's bilateral relationship with the world's biggest energy consumer is anchored by hydrocarbon ties. But cooperation between Riyadh and Beijing has also deepened in security and sensitive tech amid a warming of political ties, to the concern of the U.S. Asked about criticism of the bilateral relationship during an Arab-China business conference, Prince Abdulaziz bin Salman said, "I actually ignore it because, as a business person, now you will go where opportunity comes your way."
Oil prices edged lower on Monday ahead of a Federal Reserve meeting as investors try to gauge the central bank's appetite for further rate hikes, while concerns about China's fuel demand growth and rising Russian crude supply weighed on the market. Brent crude futures fell 29 cents, or 0.4%, to $74.50 a barrel by 0058 GMT. U.S. West Texas Intermediate, WTI, crude was at $69.93 a barrel, down 24 cents, or 0.3%. Both benchmarks notched their second straight weekly decline last week as disappointing China economic data raised concerns about demand growth in the world's largest crude importer, offsetting a boost in prices from Saudi Arabia cutting an extra 1 million barrels per day, BPD, from production in July.
Moving on to the top news in the energy sector.
The number of fossil fuel companies setting net zero emissions targets has risen sharply over the past year, but most failed to address key concerns, making them largely meaningless, a report showed on Monday. Some 75 of the world's largest 112 fossil fuel companies have now committed to reaching net zero, the point at which greenhouse gas emissions are negated by deep cuts in output elsewhere and methods to absorb atmospheric carbon dioxide. That's up from just 51 a year ago, according to the assessment of publicly available data by Net Zero Tracker, run in part by the Britain-based Energy and Climate Intelligence Unit and the University of Oxford.
China's non-fossil fuel energy sources now exceed 50% of its total installed electricity generation capacity, state media outlet Xinhua said on Monday, citing an official at state planner the National Reform and Development Commission. Non-fossil fuel power sources, such as wind and solar power, account for 50.9% of the country's total installed capacity, marking the early completion of a government target proposed in 2021, under which renewable capacity was planned to exceed fossil fuel capacity by 2025. By the end of 2022, China's installed power generation capacity was 2,564.05 gigawatts, according to data from the National Bureau of Statistics, NBS. Next, we have the top news in metal markets. Ghana recorded a 32% increase in gold production last year, enabling it to win back the top spot from South Africa as the largest gold producer on the continent, the president of the Mines Chamber said on Friday. Ghana lost the position to South Africa in 2021 after a drastic fall in output. Gold output rose to 3.7 million ounces in 2022 from 2.8 million ounces the previous year, driven by growth in the output of both large and small-scale sectors.
Iron ore futures fell amid profit-taking on Monday, with the Singapore benchmark retreating after 8 straight sessions of gains and Dalian prices easing from a 10-week high. The steel-making ingredients' most active July contract on the Singapore exchange slumped as much as 4.8% to $107.15 per metric ton. It was down 3.5% at $108.60 by 0456 GMT. The most traded September iron ore on China's Dalian Commodity Exchange ended morning trading 1.3% lower at 789 yuan and 50 fen, $110.53 a ton.
We will now look at the top news in the agricultural sector.
Malaysia's end-May palm oil inventories rose for the first time in 4 months, after output surged to its highest level so far this year, data from the nation's palm oil board showed on Monday. Stockpiles in the world's second-largest producer rose 12.63% from the month before to 1.69 million metric tons, the Malaysian Palm Oil Board, MPOB, said. Production in May swelled 26.8% from April to 1.52 million metric tons, the highest since December, helped by more harvesting days and as a shortage of labor continue to ease. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.